What if I told you that the future of money is already here? Cryptocurrency is not just a trend. It's changing how we think about finance, transactions, and even the global economy. In this video, I'm going to take you on a deep dive into cryptocurrency and its massive role in shaping our financial future. Before we dive into the complexities of cryptocurrency and its impact, let's take a step back. Think about the traditional way we manage money. We use banks, government-backed currencies, and centralized institutions to store and transfer wealth. But what if that could all change? Cryptocurrency is a decentralized digital form of money that has the potential to completely disrupt the traditional financial system. It's not just about buying and selling Bitcoin. It's about the decentralization of power and the redefinition of trust. So why is cryptocurrency important? Because it represents the future of finance. In the next 60 minutes, we're going to break down the key concepts of cryptocurrency, its role in the global economy, and how it's affecting everything from banking systems to government policies to personal wealth creation. I'll also explain the psychological shift that's happening right now, and how cryptocurrency could empower you to think differently about money, wealth, and security. At its core, cryptocurrency is digital money. Unlike the traditional forms of money, cryptocurrencies are not issued or controlled by any central authority. Instead, they are built on decentralized networks that are powered by blockchain technology. What is blockchain? Imagine a giant digital ledger where every transaction ever made is stored. This ledger is visible to everyone but can't be altered or tampered with. It's secure, transparent, and decentralized. What is cryptocurrency? It's a form of currency that operates using blockchain technology. Bitcoin, Ethereum, and thousands of other cryptocurrencies are examples of these digital assets. What makes cryptocurrency different is the decentralized nature of it. Traditional money relies on central banks, governments, and financial institutions. But with cryptocurrency, there's no middleman. This means transactions can be processed faster, more securely, and at a lower cost. So how does this affect the global economy? Well, think about the traditional banking system. The banking system, as it exists today, controls the flow of money. If you want to send money to someone internationally, you have to go through banks, which take time and charge you fees. But with cryptocurrency, money can be sent directly from person to person instantly, no intermediaries needed. Why should you care about cryptocurrency? Because it's changing everything we know about money. It's democratizing access to wealth by providing a global financial system that doesn't rely on traditional financial institutions. So how does cryptocurrency affect the global economy? Cryptocurrency's impact on the global economy is profound. It's reshaping financial systems, investment opportunities, and government policies. Global transactions. Cryptocurrency allows for borderless transactions. You can send money to anyone, anywhere in the world within seconds. No need for international banking institutions or currency exchange. This means businesses and individuals can transact globally with low fees and faster processing times. Example: in countries with unstable banking systems or hyperinflation, like Venezuela or Zimbabwe, cryptocurrencies provide people with an alternative to the traditional financial system, giving them access to stable currencies like Bitcoin or Ethereum. Banking the unbanked. Around the world, there are millions of people who don't have access to traditional banking services. But with cryptocurrency, anyone with an internet connection can participate in the financial system. This is often referred to as banking the unbanked, and it's one of the most powerful aspects of cryptocurrency in the developing world. Imagine a small business owner in a rural village who has access to cryptocurrency wallets and can now sell goods internationally without worrying about the traditional banking barriers. Financial inclusion is happening, and it's happening fast. Decentralized finance. One of the most revolutionary aspects of cryptocurrency is the rise of decentralized finance, or DeFi. Traditional financial systems are centralized, meaning one institution controls all the assets and transactions. But DeFi leverages blockchain and smart contracts to create decentralized financial services, like lending, borrowing, and trading, all without the need for traditional banks or institutions. Now let's dive into the psychology behind cryptocurrency. For many people, cryptocurrency represents a shift in mindset. Instead of relying on traditional systems that are controlled by governments or banks, cryptocurrency gives people more control over their money. It represents freedom and autonomy. Trust in technology over institutions. One of the core psychological shifts happening right now is the movement away from trust in centralized institutions toward trust in decentralized systems. In the past, people have trusted their money to banks or governments. But with the rise of cryptocurrency, the trust is shifting toward blockchain technology and peer-to-peer transactions. People are starting to trust the technology that powers cryptocurrency more than they trust traditional financial institutions, which is a significant shift in the way we view finance. The fear of missing out, or FOMO. One of the biggest drivers of cryptocurrency adoption is FOMO, the fear of missing out. In the early days of cryptocurrency, those who invested in Bitcoin or Ethereum at low prices saw massive returns. As a result, people are rushing to get involved, hoping to catch the next big wave of profit. This FOMO effect has led to both increased adoption and speculative bubbles. It's important to recognize that cryptocurrency markets are volatile, and understanding the psychological factors at play can help you make better financial decisions. Now that we've explored the massive potential of cryptocurrency, let's also talk about the risks and challenges. Volatility. The price of cryptocurrency can fluctuate wildly. While it offers huge potential for profit, it also carries significant risk. You need to be aware of the market volatility and the psychological pressure that comes with it. Regulatory uncertainty. Governments around the world are still figuring out how to regulate cryptocurrency. While some countries have embraced it, others are trying to restrict or ban it. The future of cryptocurrency is still uncertain in terms of regulation, and that adds a level of risk for investors. Security and scams. The cryptocurrency space is also filled with scams and fraudulent schemes. As a decentralized and largely unregulated market, it's important to protect yourself and invest in secure, reputable platforms. So what does this all mean for the future? Cryptocurrency is here to stay. It's reshaping our financial systems, providing new opportunities for global transactions, and even changing the way we think about money and power. But it's not without its risks, and it's important to approach it with caution, knowledge, and strategy. To thrive in this new world, you need to 1. Educate yourself on the technology behind cryptocurrency. To truly thrive in the cryptocurrency world, you need a solid understanding of the technology that powers it. Cryptocurrency isn't just about the digital coins, it's about blockchain technology and decentralized networks that make it possible. Understanding the underlying blockchain technology is crucial because it explains how cryptocurrencies are created, transferred, and secured. By educating yourself about these technologies, you not only increase your own knowledge, but also better position yourself to make informed investment decisions. Without this understanding, you risk jumping into the market blindly, which can expose you to unnecessary risks. 2. Invest responsibly, understanding both the potential and the risks. Cryptocurrency offers enormous potential for wealth building, but it's not a guaranteed path to riches. The market is highly volatile, and prices can swing dramatically. As with any investment, it's essential to understand the risks involved before you commit your money. 3. Embrace the psychological shift towards decentralized finance, but keep your eyes open for potential scams. When you hold cryptocurrencies, you control the private keys that give you access to your assets. If you lose those keys, you lose your assets permanently. There's no central authority to turn to for help. As more people get involved with crypto, it's easy to become overly confident, especially after experiencing short-term success. This overconfidence can lead to overexposure and eventually significant losses. The future of money is not just about traditional banks and currencies. It's about a decentralized, transparent, and inclusive financial system that puts more power in the hands of individuals, businesses, and communities. Cryptocurrency has the potential to change the global economy, but only if we are proactive, educated, and open to the new possibilities it offers. If you found this video helpful and want more money-smart tips to help you live the dream, make sure to like, subscribe, and share it with anyone who wants to understand the impact of cryptocurrency on the global economy. Stay tuned for more insightful videos on how to navigate the evolving financial landscape.